Welcome back to another episode of the Trinaya podcast, where we break down the real estate market, give you the insights you need, and help you make informed decisions, whether you're buying, selling, or investing. Today, we're taking a deep dive into the Federal Reserve's January 2025 meeting and what we can extrapolate from it as it pertains to the housing market. Fed Chair Jerome Powell described the market as stabilized, but what does that actually mean for home buyers, sellers, and investors? Is this truly a sign of balance, or just a brief pause before the next major shift? We'll unpack the key takeaways from the Fed's latest assessment, including why mortgage rates remain high despite no recent rate hikes, how inflation trends and housing inventory levels are shaping market conditions. What fiscal policy and economic uncertainty mean for real estate in 2025, the best moves buyers, sellers, and investors can make in this evolving market, and here's something to think about. What if the Fed decides to cut rates later this year? Would that be the boost the market needs, or would it create new challenges? Stick with us as we cut through the noise, analyze the data, and give you real, actionable insights to help you navigate today's housing market with confidence.
Welcome to your deep dive. Today we're diving into the U.S. housing market, using your insightful analysis from the recent FOMC press conference.
Yeah, we're going to try to decode all that Fed speak, analyze the market forces that are impacting things, and help you make sense of it all. You know, whether you're thinking about buying a house or selling one, or even if you just want to kind of stay informed about what's going on.
Perfect. So the Fed Chair Powell, he used the word stabilized to describe the housing market these days. What exactly did he mean by that? Is that actually good news for us?
Well, stabilized basically means that we're not seeing those crazy price swings, or the super fast price increases that we saw in the past couple of years. It's not a full recovery, though. It's more like a pause, kind of like a moment of calm before the market figures out, what it's going to do next.
Okay, so what's keeping the market from making that next move then? Is it those high mortgage rates that seem to be sticking around?
Absolutely. The Fed has hit pause on raising interest rates for now. But that doesn't automatically mean mortgage rates are going down. In fact, they've actually climbed back up above 7% recently. That's because mortgage rates are also affected by how investors are feeling and what's happening in the market overall.
Okay, so it's not as simple as the Fed raises rates and mortgages go up. What's the connection there?
Think of it like this. Right now, there's a lot of uncertainty about what's going to happen next in the economy. Will inflation come back strong? Will we go into a recession? Investors get a little nervous when things are uncertain, and that makes them demand something called a risk premium when they're lending money for long periods of time, like with mortgages. They basically want a higher return because they see more risk.
Makes sense. So even if the Fed keeps rates where they are, those bigger economic worries are making mortgages more expensive to get. But the analysis you gave me mentioned that shelter inflation is cooling off. Does that at least give us like a glimmer of hope here?
It does. Shelter inflation, which includes things like rent and what homeowners would pay to rent their own homes, has actually been decreasing steadily. That's a good sign for a couple of reasons. First, it directly affects the overall inflation rate. And second, if this keeps up, it could eventually lead to lower mortgage rates.
Oh, okay. How would that work?
Well, if the Fed sees that inflation, especially this shelter inflation, is truly under control, they might feel more comfortable, easing up on their monetary policy. That can mean cutting rates sometime in the future. And that would probably mean lower mortgage rates, too.
Okay, that makes sense. Let's switch gears a bit. We've been talking about this big economic picture. So what does all this mean for like a regular person who's thinking about buying or selling a home like right now? What should they be doing?
Well, if you're trying to buy a house right now, patience is going to be your best friend. Prices might not be dropping dramatically, but waiting for those mortgage rates to maybe come down could save you a lot of money over the life of your loan. It might also be a good idea to set up some rate alerts on those mortgage comparison websites out there. That way you'll be instantly notified if rates drop below that target you're looking for.
Interesting. And what about people who are trying to sell? Should they just wait and hope for those high prices we saw last year to come back?
The market has definitely changed.
Yeah.
While things are looking more stable, the days of bidding wars and, those prices shooting up super fast are probably over for now. If you're selling right now, setting a realistic price is super important.
So it sounds like both buyers and sellers kind of have to adjust what they're expecting in this new market. But what about those other factors besides just interest rates? What else is going on that's shaping the housing market right now?
Well, one big thing we can't ignore is the housing inventory. It's really low in a lot of popular areas. And that helps explain why prices are kind of staying steady. Even though mortgage rates are higher, it's basic supply and demand. When there aren't many houses for sale, the competition for those houses stays fierce.
Makes sense. So we've got the Fed keeping a close eye on inflation. We've got mortgage rates being affected by both the Fed and how the market's feeling. And then we have low inventory keeping those prices from really falling.
It's a pretty complicated situation. Your analysis also mentioned that, fiscal policy is adding to the uncertainty.
Yeah, definitely. Potential changes in fiscal policy are something to keep an eye on. Things like new tariffs or, changes to regulations. Those things can ripple out and affect the housing market.
Okay, can you give me an example? How could those things actually impact housing? Sure. Let's say new tariffs get put on imported building materials. That would probably make construction costs go up for new homes.
Right.
Right. So it becomes more expensive to build. And then the result is you have fewer new homes getting built, which could make that inventory shortage we talked about even worse.
Ah, I see. It's all connected.
Exactly. And another piece of this puzzle is the labor market. When the job market is strong and wages are growing, people usually feel better about making a big purchase like a home. But if hiring slows down or unemployment goes up, people might think twice about buying.
So basically, how confident people are about the economy has a big impact on the housing market, just like with other parts of the economy.
Exactly. People want to feel secure about their jobs and their money before they make a big investment. And right now, there is some uncertainty about where the economy is headed.
Okay, so there are a lot of moving parts here. Interest rates, inflation, inventory fiscal policy, the job market, consumer confidence. What would you say is the main takeaway for our listeners who are trying to make sense of all this?
I think the big takeaway is that the housing market is in a transition phase. It's finding a new balance after a really intense period. There are a lot of things that could affect what happens next. So no one can predict the future with 100% certainty.
No crystal ball today. Gotcha. But I want to make sure our listeners have something useful to take away. What's one actionable piece of advice they can use based on all this information?
I'd say this: focus on what you can control. If you're hoping to buy a house, on getting your credit score as good as possible so you can get the best mortgage rate possible. Research the neighborhoods you're interested in and really pay attention to what's happening in those local markets. If you're selling a house, make sure your house is in great shape and talk to a good real estate agent to figure out what a realistic listing price is.
That's really good advice. Being prepared and knowing what you're doing are super important in any market, but especially in a market that's changing this much. In your analysis, there was a section about how the housing market might be different in different parts of the country.
Yeah. It's important to remember that real estate is really local. The things that affect prices and inventory can be completely different from one city to the next, or even one neighborhood to the next.
So what we're seeing at the national level doesn't tell the whole story.
Right. For instance, some areas might be seeing a lot of people moving in because there are new jobs there. Or maybe the lifestyle is just really attractive. That can push demand up and make prices higher, even if the overall U.S. market is cooling down.
So it's really important to look at what's happening in your specific area?
Definitely. Look at things like how many jobs are being created in that area, any new building projects happening, and how much inventory there is in the neighborhoods you're interested in. That will give you a much clearer idea of what to expect.
This is super helpful. It really shows how important it is to look beyond those national headlines and understand the specifics of your local market.
That's what we're here for. We want to give you the knowledge and the tools to navigate this market and feel good about your decisions.
Speaking of knowledge and tools, I want to go back to something you mentioned before about setting up alerts for mortgage rates. Can you talk more about that?
Sure. There are tons of websites and apps now that let you set up custom alerts for mortgage rates. You can say exactly what rate you're looking for, what type of loan, and even the area you're looking to buy in. That way you'll know right away when rates hit that sweet spot, so you don't have to spend all your time checking them yourself.
Sounds like a great way to save time. And what about staying informed about those other factors we talked about, like inflation and the job market and fiscal policy? What resources would you recommend for keeping up with those things?
For economic data, I'd suggest checking out reputable sources like the Bureau of Labor Statistics, the Federal Reserve's website, and the National Association of Realtors. They've got a ton of info on everything from inflation and employment to how many houses are being built and how much inventory is available.
Those sound like good places to start. It seems like staying informed is kind of like being a detective. You have to gather clues from all these different places to really understand what's going on.
It definitely can be.
Yeah.
But it's worth the effort. The more you know about what's driving the market, the better decisions you can make.
Okay, so let's shift gears a little bit. I want to talk about the different perspectives in the housing market. We have people who want to buy houses, people who want to sell houses, and then we have investors. What does the current market look like for each of these groups?
Well, for buyers, like we said earlier, patience and being prepared are really important. Interest rates might stay high for a while, so it's crucial to really look at your finances, get pre-approved for a mortgage, and be realistic about what you can afford.
So no need to rush into buying a house just because you're worried prices might go up.
Exactly. Take your time and be strategic. Make sure buying a house fits into your long-term financial goals.
What about people who are selling their houses? What advice would you give them in this market?
I think sellers need to understand that the market has changed. Buyers are more picky now, and they're not willing to pay as much as they were a year or two ago.
So setting a realistic price is super important.
Totally. Sellers need to be competitive. Work with a good real estate agent to figure out what your house is actually worth, and then set a price that will actually attract buyers. You might even want to think about making some updates or improvements to your house, so it stands out from the competition.
Great tips for sellers. And last but not least, what about investors? What should they be thinking about right now?
For investors, this market is tricky, but it also has some good opportunities. With interest rates higher and rental prices not growing as fast, it's really important to carefully look at any potential deals and make sure you're considering the higher cost of getting financing.
So maybe a little more caution is a good thing right now.
Yeah. Do your homework.
Yeah.
Research what's happening in the local market and really crunch those numbers before you make any decisions. But like I said, there are definitely opportunities out there. Smart investors who are patient and do their research can find properties that are priced lower than they should be, and those properties can have great potential for making money in the long run.
That's encouraging to hear. So we've covered a lot of ground today. We've talked about interest rates, inflation, inventory fiscal policy, the job market, consumer confidence, how things can be different in different parts of the country. And we've looked at what the market's like for buyers, sellers, and investors. Is there anything else our listeners should be thinking about as they try to figure out this whole real estate world?
You know, one thing that's important to remember is that the housing market is always changing. What's true today might not be true tomorrow. So staying up to date and being able to adapt are really important.
Good point. So how can our listeners stay ahead of the game? What should they be watching for in the next few months?
I'd say keep a close eye on those key economic indicators we talked about. Inflation, interest rates, and the job market. Those are the big things that drive the housing market. And any changes in those areas will probably have a ripple effect.
So it's all about connecting the dots and seeing how those big economic trends are affecting things in your local market.
Exactly. And don't forget about those regional differences. Pay attention to what's happening where you live. Are they building new developments? Are there new jobs coming in? Is the population growing or shrinking? Those things will have a big impact on your specific market.
Okay, so it's like having a checklist of things to watch.
Yeah.
Great advice. We've talked a lot about the challenges in the housing market right now. High interest rates, worries about being able to afford a home, economic uncertainty. But are there any good things that could come out of this market? Any silver linings we can look for?
That's a great question. And yeah, I think there are opportunities in every market, even when things are tough. For example, this might be a good time for people who are trying to buy their first home, especially if they haven't been able to afford it in the past few years. Prices might be a little lower in some areas, and there might not be as much competition from investors, so it might be easier to find a home.
So there's still hope for people who have been trying to get into the market.
Absolutely. And for people who already own a home, this might be a good time to refinance their mortgage and get a lower rate, especially if interest rates do start going down eventually. Or it might be a good time to think about moving to a bigger house or a different neighborhood.
I like that perspective. It's good to remember that even when things are uncertain, there's always a chance to find something good.
Definitely. You just got to be resourceful, be able to adapt, and be open to new possibilities.
Well said. I think it's time to move on to our final thoughts for this deep dive. But before we do you have any last words of wisdom for our listeners as they try to make sense of this housing market that seems to be constantly changing?
I just say this: stay informed, stay curious, and don't be afraid to ask questions. The more you know about the market, the better decisions you can make.
Couldn't agree more.
Okay, so we've really dug into what the Fed's doing. We've talked about all these factors affecting the housing market, and we've even found some potential upsides. But here's a real question to think about. What if, instead of keeping rates steady or raising them, the Fed actually cuts rates later this year?
That's interesting. We've been talking about how high rates could be a problem, But what about if rates went down? How would that affect things? Especially like in other parts of the economy besides housing.
That's the big question, isn't it? Cutting rates can be a powerful tool. It can encourage people to borrow and invest more, which could help the economy grow and maybe even create more jobs.
So it sounds like a good thing, right? Lower rates, more economic activity. But I have a feeling it's not quite that simple.
You're right to be a little skeptical. There's always a trade-off. One thing that could happen is that lower rates could lead to more inflation. Think about it. When it's cheaper to borrow money, people tend to spend more. And that can increase demand, which can push prices up.
So it's a balancing act. The Fed wants to help the economy grow, but they also don't want prices to go crazy. That's got to be a tough job.
It is. And it's not just about inflation either. Cutting rates can affect other things too, like the value of the dollar and whether foreign investors want to put their money in the U.S. It's a whole chain reaction with a lot of different effects.
This deep dive has really shown how everything in the economy is connected, like one big puzzle.
Exactly.
Huh.
And that's why it's so important to stay informed and see the big picture. Things don't happen in a vacuum.
Very true. Well, I think we've given our listeners a lot to think about today. We've gone deeper than just the headlines. We've looked at the details of the housing market, and we've given them the knowledge to make good decisions.
And hopefully we've made them curious to keep learning and exploring.
For sure. Thanks for being our guide on this deep dive. It's been really interesting.
My pleasure.
And to our listeners, thanks for joining us. Remember, whether you're buying, selling, investing, or just trying to stay on top of things, knowledge is power. The more you know, the better choices you can make. Keep learning, keep exploring, and keep diving deep into the things that matter to you.